This week I had an awesome question, and it's one that I get a lot. Rob, but isn't the share market risky? And it can be for some, but what it depends on is the time frame. It's all about how long you have to invest. So if someone comes to me and says, Rob, here is $500,000, I'd like you to invest into the share market, and by the way, I want that money back in about 6 to 12 months time because I've got to do this X project. In that scenario, that is risk. I will say, no thank you, put the money in a term deposit, do nothing. Whereas if you consider someone, let's say someone my age 51, I hope to make it through all the way through to 90 to 100 in good health. That gives me a 40 to 50 year runway where I can put up with the ebbs and flows of the markets in the short term. I should not need to worry about what the markets do in the short term. And how do I avoid doing that? Well, I'm going to not look at the portfolio on a daily basis. I know that the businesses in the background, the businesses that I own, are going to be doing their thing. They're going to be improving their products and services. And over time, that will increase revenue and profitability. That's what will dictate the long-term valuation. The short term will be dictated by how investors feel about the market, how nervous they are, how greedy they are, how fearful they are. So, is the share market risky? Yes, it can be. It all depends on your term. If someone has enough money where we're talking, you have $5 or $10 million and you're sitting there at a term deposit at 4 to 5%, do you need to take risk on? Well, you're gonna have more income than what you need. But the reason why you might take on some market volatility there is that, that's going to keep you ahead of inflation. So you've got to always remember there is the risk of inflation chewing away and eroding the purchasing value of your dollars over the long term. So you've got to remember there's different types of risk. So in short, if you're a long-term investor, I'd say that there is very little risk, particularly if you behave appropriately when markets are down, and that is either hold and or buy more. The risk comes in when it's too short a time frame. Here is some money, I need it back within 5 years. That's where the risk increases. It's all about the time frame. Thanks for listening.